Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar just pare back just a little bit. I have put in the chat room, I was taking on that short. Remember that 97.06, that was our bias chart resistance on the cash dollar index. So I've gone and kept that because if you saw the Asian analysis, it would take two consecutive 2-hour bars above 97.31 to negate that. Also kept the dollar CAD short that I had from 33.56. We'll see how that plays out. Crude oil is responding a little bit better. In a moment. I didn't take the euro, which I probably should have. Mistake there. We had 13.55 for our support, and the low for the day was 13.50.5, so off by 4.5 pips. Let's move this out of the way. I do have the dollar yen, the 13.09, 13.08. We're right there, so we're just hanging around here. If you saw in here, we had our resistance right there at 13.08. So gold, I haven't really done anything with gold, although on the short-term basis, it was on a little bit of a sell. We've turned around, but the 2-hour chart, if you look at this exponential moving average, that's just been keeping this market in check. I just don't know how this whole Brexit thing is going to play out. We did go down to this 25.64. We've been talking about this level, 25.60 for some time here. And I think we had, I guess that was the trigger thing, but we've been from a longer term basis where it could go down there. Actually, we went below there. I'm not sure what the heck's going to happen with that. But moving back in here. We did get that pullback here in the dollar switch, almost to that 98.57. I believe we use that as our bias chart support, the bottom of this zone. Pretty good, strong support in this area here. Dollar CAD, finally, that's starting to work my way a little bit better. One of the things I was concerned about, like I said, here's that 33.55. I think we had 33.56 when it came in, but obviously this whole Brexit thing kicked things up. And we had talked about this. I was talking to somebody who was asking me yesterday. If you remember, we talked about this. You didn't want to see it back above 33.43, which it did. Okay, but when you look at it from a weekly, and that's what I said in the webinar yesterday morning. You see how the previous week closed above that other week. I'm not talking about this one right here, this one. So it still kept its bullish momentum. It's not good that it's above 33.43, but I think that we got a little bit overdone. So I'm thinking we should be able to pare back some. We'll see. And crude's reacting a little bit better, so we'll see how that plays out. Aussie dollar still hugging the lows down here. I've been using the exponential moving average, but kind of keeping them on there, kind of keep me in. They've worked very, pretty well, keeping things in check as far as the momentum. Not bad at all. So pretty satisfied overall with these. So I've triggered on the buy mode here on that euro. And so much of these markets nowadays, we talk about that 3 steps forward, 1 step back, or sometimes 2 steps back. They seem to move a lot on just short-term momentum. So feel more comfortable, using that. Dollar index starting to pare back a bit. We talked about the importance here is at 97.14. It closed just a hair above that. But as I mentioned on the cash dollar index, would need two consecutive 2-hour closes above 97.31 to negate that. Thought they'd be selling the heck of it at 97.06, but we were able to push even higher. But the whole Brexit thing threw everything, off. Get rid of this. So let's go on and move into the news real quickly. Just to give us the tone for the day or what we're looking at. The Canadian dollar weakened against its US counterpart on Monday as the delay. And before we do that, hang on. Let's go and take a look at the. We do have coming into today, we have PPI, final demand, so move it, but maybe not as much as you may think. That'll be at 8:30 Eastern. And looks like that's going to be the headliner right for today, PPI demand. We did have German zoo. Wow, look at that drop in German zoo. Actually, you know what? Not bad. They were looking for -25. They got -17.5. Last time was -24. So an improvement there. So German morale did improve. UK pay growth, seen holding near a 10-year high. So it says the Canadian dollar weakened against its US counterpart on Monday as the delaying of a key Brexit vote weighed on risk appetite and the spread between Canada's 2- and 5-year yields turned negative for the first time since 2007. Prime Minister May postponed a parliamentary vote on our Brexit deal to seek more concessions, but the European Union refused to renegotiate, and lawmakers doubted her chance of winning big changes. Had the UK not had pushed off the vote, we think the dollar CAD would be back below 133, said Andrew Sarachansky, foreign exchange analyst at Clarity. It's just risk-off sentiment in the market that's kicking the loonie back lower here. Price of oil, one of Canada's major exports, fell in line with further declines in global stock markets, erasing the gains made last week. Canada's 5-year yield fell 6 basis points below the 2-year yield. A flat or inverted yield curve could reduce the incentive for banks to lend and hinder investments in the multi-year projects. On Thursday, the currency touched its weakest level in nearly 18 months at 34.45. Still down on Friday, showed that Canada added a record number of jobs in November, and the unemployment rate dipped to a new all-time low. Performance analysts should help ease the Bank of Canada worries about a recent economic slowdown. Canadian Mortgage and Housing Corporation said on Monday that the seasonally adjusted annualized rate of Canadian housing starts increased to 215,000. So we'll see if we can get this dollar CAD to pare back a little bit further. Certainly crude pushing a little bit higher would help. Australian New Zealand dollars find tenuous support and political tumult. The Australian New Zealand dollars bounced off the canvas on Tuesday as signs U.S. and Chinese officials were still talking on trade helped soften the blow of the UK Brexit chaos. Sentiment improved just marginally after China's Commerce Ministry said Vice President Liu. He spoke on Tuesday with Treasury Secretary Steve Mnuchin. Discussion on pushing forward the next stage of trade talks came as a welcome salve as the arrest of a top executive Chinese telecom giant had threatened to scupper the process. The glimmer of hope was enough to lift the Aussie up to 72 off a 4-week low of 71.70. Resistance was still lined up at 72.27 with major chart support at 71.64. Here we are right now. We had right at 72.17. The Kiwi edged ahead of 68.82. Both currencies have taken collateral damage overnight after PMA stunned lawmakers by postponing a parliamentary vote on her Brexit deal. The news sent sterling skidding to its lowest in 20 months against the dollar. The UK's divided nation and divisive politics mean that without support and concessions from the EU, more difficult and the market unsettling alternatives lie ahead, said Westpac macro strategist. Until any form of certainty can be found, UK assets and sterling will remain under downside pressure, as will the economy, as investment is withheld and activity subdued. All this tumult kept the Australians' top-rated bonds well supported. Yields on 10-year paper held at 2.445% at the lowest since June of 2017. And on to sterling bounces after the slump by the Brexit vote. May pulled a parliamentary vote deal with the European Union. That sent the pound tumbling towards 125. But in a sign that traders were waiting for some clarity on Brexit developments, euro sterling was broadly flat at 90.22. And also the pound up from a 20-month low after the Brexit setback and the dollar retreats. The pound edged up from 20-month lows on Tuesday as investors tried to decide whether PMA's postponement of a vote over Brexit deal would lead Britain into a chaotic exit from the European Union. May called off a parliamentary vote on our Brexit agreement to seek more concessions. The move thrust Britain's exit from the European Union into turmoil and pushed the pound down. The market has priced in a slightly bigger chance for a no Brexit deal, so Commerzbank analyst Tu Lan Wen. But we'll be sideways again until we have a decision of some kind. EU leaders will discuss Brexit at a summit this week, but will not renegotiate the deal. European Council President Donald Tusk said weakness in the sterling helped nudge the euro up to 13.77. Concerns over violent protests in France against President Emmanuel Macron's economic reform have limited the euro's gains recently. Let's see, the pound slide has helped the dollar, which recovered from a 2.5-week low against a basket of currencies. And this was expected. That's why I thought we'd make that run towards that 97.06 because what was going to happen with the pound. But I didn't think it was going to probably quite a bit of a fall, so pushed it up even further than that. Failing U.S. bond yields will eventually force the dollar into a downtrend, but probably not at the moment, said Junichi Ishikawa, senior FX strategist, IG Securities in Tokyo. The 10-year yields have dropped to a 3-month low this week with dovish comments from Fed officials and soft U.S. economic data, reinforcing views on a pause in the tightening cycle. In emerging markets, the Indian rupee was jolted after the Reserve Bank of India Governor Urjit Patel resigned abruptly on Monday after a months-long dispute with the government over policy and raised concerns about the bank's independence. And foreign investors spurn U.S. Treasuries as the curve threatens to invert. A worrying sign of inversion in the U.S. Treasury bond curve is dulling the appeal of the world's highest yielding bond market for investors. Overseas investors are renewing their investments of shunning Treasuries as the rate of the short end rises above those at the longer end. There's the whole issue of hedging costs. That is the one thing that was inconsequential at the start of the year. But now it's sizable, said Paul O'Connor. You're knocking off a substantial part of the U.S. yields when you buy from the U.K. perspective and hedge back that exposure. When we buy government debt, we always hedge it. You don't want to take the FX risk, he added. The Federal Reserve has raised rates 8 times since 2015. It looks like to set them higher against the next weekend, even though the global central banks stay shy of normalizing policy. The ECB and the Bank of Japan have both kept interest rates below 0%, while the Bank of England has raised rates only twice from its record 0% since in 2016 after the shock of the Brexit vote. As U.S. short-term rates climb, currency forward markets, which are closely linked to differences in interest rates between currencies, have moved to price in the higher cost of holding dollars. We won't buy U.S. Treasuries with currency hedge. The return would be negative after hedging, Kazuyuki Shigemoto, general manager of investment planning at Daiichi Life Insurance. Higher hedging costs would have discouraged investors if longer bonds had risen as much as short-term yields. We've seen a real decline in flows, especially from Japan, and particularly a lot of them are directed to the European and even Asian assets, said Bob Michelle with JP Morgan. Even emerging markets are offering some value after a violent sell-off earlier this year. One option is to give up currency hedging, still the holding of dollars just when the Fed may be about to slow its pace of monetary tightening could be risky. We want to buy dollars on dips, but an inverted yield curve may portend a future recession, and there are many other factors. So we need to be carefully look at economic fundamentals, said Toshihiro Kusiri, Deputy General Manager at Nippon. The attraction of the U.S. Treasuries investments with a full currency hedge has declined. So we've been buying investment grade corporate bonds in the hedge U.S. debt space, says Fukushima. Fukushima said the Compo does not plan to radically change its stance because the film is on course to meet its internal income target. So you have to wonder how this is going to ultimately end up affecting the dollar, although the dollar really has held up very well. Gold inches, finally, gold prices inch higher as the dollar softens. Gold prices edged higher Tuesday as support by hopes that the U.S. Federal Reserve could pause its rate hike cycle sooner than expected as the dollar slipped after the previous session's rally. The dollar index, a measure of the greenback strength versus a group of 6 major peers, edged lower after rallying the previous session. Gold is likely to be the best safe haven in the dollar at the moment, said Harish. The Fed plans to continue raising rates next year, and we're met with more skepticism on Wall Street on Monday, with futures traders betting on a pause and one major bank partially walking back a hawkish prediction. Markets still see an increase in December, but even one further hike in December 2019 is being questioned, whereas 2 of them fully priced in just a month ago. Meanwhile, hedge funds and money managers trimmed their net short positions in COMEX gold and silver contracts in the week to December the 4th. So let's go and move on to the bias chart. So we had 1355 for our support here on the euro. That ended up holding up very well right in here. That's where we're looking for the market potentially come down. Probably would have been a good idea to go and take on a position at that time, which I didn't, which I'm regret that I didn't. I saw it moving up a little bit higher in Asia, but once again, Asian trading has been fairly quiet overall. But we've since moved even higher as European trading has kicked off. We've moved here from European trading in the lower 1360s on up to about 40 pips, just about since the beginning of European trading. So support is going to come in right there. We'll look for 13. We'll just move it just ahead of 1376. At this point, you can actually make the case for right here for test here. 1368, just a little bit higher than where we were already for our bias chart support. So it's going to come in at 1368. I don't think the euro can run too far ahead of the FOMC, so I think we'll use 1423 right here. Basically, almost like a trigger in case this thing would take off. I don't really necessarily see it taking off before then. Although once we get past FOMC, I think we could move higher, especially if the hawkish rhetoric pairs back a bit. So we'll go 1423. built up a nice little base here around this 1353 here. And I'm looking at here on a 30-minute. Did a lot of good work here. And then you can see right above these highs, that's where they end up finding support here on this pullback. And we've had pretty good little pushback on here. Probably just some decent short coverage, since anyone that thought it was going to fall further forced them out of their positions. But I don't think you're going to see any real resolution on this thing until we get past FOMC. But I do expect this market to move higher and eventually come in here to this challenge, this 1491. If we can see the hawkish rhetoric, which I would think, pare back. Moving to the cable. Well, we've been talking about this 2560 for more than 2 weeks, and I guess it finally made it down there. Obviously, that was big news with May postponing the vote. Looked like we might even take out 25, but certainly they found some good short covering in there, and we're just kind of pushing back and forth. I don't have a good take on this market other than we mentioned the 2560. Eventually, it looked like it wanted to resolve itself. Maybe a little bit of short covering would come in due, and resistance is going to come in right there. You can see it, 2661. I don't think the market's going to pull back this far. I'm sure there had to be a lot of pretty good short covering at these lower levels. So it's just going to come that same area we've been talking about, which we had is 2560 on the daily, but here on the 30 minutes, actually a 2 hour, it's going to be 2560. I can actually take a look at this on the 2 hour. Yeah, right there. Certainly bearish. There's no doubt about that. And let's go and move into the Aussie dollar. Well, with the whole China thing, and then on top of that, the Brexit, it has come back to weigh on this. And we're back down here testing this key level here, the 7186, which we did. We actually came down here and tested down here to 7180 or 79. Had the 7186. 72.75, which is our resistance right there. Seems like a long ways off. But we're going to go and keep this 72.75. If we do get a softening of some of the rhetoric, this is where they're going to go to. And quick. So we'll keep the 72.75, and we had the 71.86 actually came and just got a bit below that 71.79.5 or 71.79. We'll keep the 71.86 and the 72.75 for the Aussie. So we're just trading at the bottom of this range in here. Let's go and move into the Kiwi. So we had 68.60 and 69.18. The 68.60, the low was 68.62, so it's not bad. Certainly has fared a lot better than the Aussie itself. So low 62, we had 68.60. I want to keep that 68.60. You can see what I came up with that from right here. So off by a couple pips, but it's still a relatively tight range. So I'm going to keep the 68.60 for support. We had 69.18 for resistance. I like the 69.18. Similar in the sense of the Aussie is that I don't see any reason to change anything. And let's go move into the dollar CAD. Well, we are continuing to weaken here in the dollar CAD. For those that may have missed it, yesterday one of the things that we covered, and I covered that in the Asian analysis, was that we had a very, very nice recovery off of those lows. I don't like to hold over the weekend at all, and the momentum was just absolutely abysmal. But I remember buying down in here, and actually, I don't know how I couldn't get filled for whatever the reason was at the time, but I was trying to actually buy into the mid to lower 50s, and chased it for a few pips, but I got long, and then it was very, very slow to come. But I mean, would have loved to. Had it not been a weekend, I would have hung on for a little bit longer. Would have made it a little bit nicer. Would never hung on to this kind of move, but was expecting to grab at least like around 35 pips or something. And it was just so slow. I'm thinking, well, God, how many people are going to have to crash out of this thing on a Friday? But we ended up pushing even farther, and I was saying, hey, wow, it was a smart recovery, very nice recovery. I think I got up as high as 33.28 or something. But I said, hey, watch it if it goes, I like this 33.55 area here, and you can see here that almost like a little pivot right here. See that? So it wasn't good that it closed above 33.43, but one of the things that we looked at the time and I pointed out was that if you looked at here in yesterday's analysis, you see here, this is this week, but this was Friday right there. And you see that it closed above the other one. So you still had the upside momentum still going. So we'll see if we go on and pair back here. Let's go and move this back on to the daily. See, we're starting to pair back. There's going to be a little bit of support here coming around that 33.80-ish. Cruise kind of responded a little bit better. We got this little crossover that But you want to go long, so you just keep going with it. And you can see the market paired back, but we're still losing some steam. But once again, these Mondays, just as Amanda had mentioned, sometimes you can't trust these Monday price actions. And obviously, the UK thing was a big, big deal. Now, there's some support here, as I mentioned to you, at the 33.80 right there. There's some support. The market may bounce off a little bit. We'll have to see, but I think that may start to lose some momentum. And if it does, the real support is going to come in right there. We'll even give it a little bit further. Actually, it'd be 33.31. But short-term basis, yeah, 33.56. 33.56. Probably see a little bit of a bounce from this area. I might even use that as an opportunity to get out and try and sell a bounce, because this may be a good area for some short covering, and then try and get back in on a bounce. And by that time, if it does make it down there, the momentum will have shifted back down. So we'll go with 33.56. The overall tone may start to change once we get past FOMC. If they feel like the Fed may start to ease back, then you can also have crude oil start to work a little bit higher, and may not come fast, but little by little we may start to slide back down here. So we'll see what happens. On the upside, no, it's going to be right there at 34.21. And now 43 becomes key once again, but on this side of the ledger, on the support, and that's the daily. Now, in the dollar Swissy, we were looking at 98.52 for support. And we made it as low as what? 98.63. So not too far off. We were looking for this to overshoot this just a hair and come in right there, which would have been the 52. I think that the 50% comes in the 80s, but we'll have to see. Much lower. Let's take a look here. Yeah, 98.35, 98. I knew it was a little bit lower than right here at that 52. We're actually going to use this as a support in case we get past, like, for them to try and bounce off FOMC. So let's go with 98.35, so we can still think we could break lower here. I thought it was too low for yesterday, and that's why we went with the 52, and actually the low was 63. And as far as the upside, it's going to be right there, 99.26. You can see that coming across. right there. And you can see this long-legged doji too, and that is a long-legged doji right there. See that? Screen right there. We'll call it 99.27. Well, we had 28 already. We'll just keep the 28 there. And let's do the, we'll go and mark off the fib. There we go. So let's now go and move into the dollar yen. Dollar yen's still holding up fairly well, and this is at key 1308. We had pointed out that was from, remember back in, and we mentioned that yesterday after Thanksgiving Day, and then we're able to go on and launch from there on up to the 114. There was that dip, and actually it's right in here, and then we're able to move up to 114 once we rescaled and captured the 1308. Remember, it's 1308 and a half. So they're hanging here. This is almost working like a pivot. Look, got a little bit overdone, no doubt, with the UK Brexit, and obviously you have FOMC coming up. So it's important, this 1308, looking at it on a resistance, short term. Let's take a look here. It's going to be right there, 1344 for resistance. That's going to be support right there, 1267. See that coming right across there. There we go. I think until we get past FOMC, we're kind of a little bit of a holding pattern in here. If we kind of in the middle of this range here, right here you can see this 1221. Been quite the big range it is, and yeah, there was obviously this price action above this 1369, but the bulk of this trading takes place in here, and we're just back basically smack dab in the middle of this range area, 1221 to 1369, maybe just a little bit here above the 50%. Might even have to move this like right to here, there, right there. So probably in a holding pattern until we get past that. And let's go move into the cash dollar index. So looking here on the daily, it's been interesting how this market hasn't been willing to really give up the ghost yet, but obviously a good reason because of what's happened with the Brexit. So, but you can look here that as we struggled, to get past this 97.14 or hanging above it, yet here it's almost look like a hanging man, and then the market, we start to drop and then we come back. Well, that big strong comeback was obviously for Brexit. Now we're coming here and seeing if we can push a little bit lower. I think maybe we can. We might get a little bit of a dark cloud cover by the end of the day if we can push a little bit lower. And then most people don't expect, most people now are expecting almost like a Fed of that's going to come up like a one and done, probably, although they may not come out and say that, but that's the thinking. So they might be able to allow the dollar to pare back a bit. We shall go in and see. Let's go and take a look at here on the daily. I mean, we're still going on the daily, but I mean the 2 hour. So we talked about yesterday about the 9706 being a very key area here. And that was our bias chart resistance. You can see that right there. And the market got above it and then came below it and then went on to push beyond it. Obviously, the Brexit news was a huge deal. I guess in some ways, if you think about it, that was such a big deal. And I thought that we could end up, and early in the day, it looked like, oh, come on, there's no chance. We're in the 60s. That's not going to happen. But I thought with this Brexit thing, we could move. Well, we actually, I guess on a worst case scenario, could have blown through this and made it all the way up close to around 97.45-ish. So the fact that it ran out of gas here is not too bad, but that certainly kept the pressure on with the mess that they got going on in the UK. So we'll have to see how this goes and plays out. But for right now, that 97.06, actually, you can see here's almost, this is very important right here. It's actually 97.10.5. Call it, I guess, 97.11 at this point. So it's going to be 97.11. So just move it up just a few ticks. With 14 still important on the daily. Keeping this range. And for now, I think we'd have to just put the dollar yen as range 2 for now. Support on a short-term basis comes in right there, 96.68, right there. And you can see the touches, and you can see also the length of these bars and them trying to push on the upside, a little bit on the downside, but it gravitates back in here to this 96.68. So on a short-term basis, I think that's what they'd be looking at. That may also come close to a fib on a very short-term basis. Toying with the 38% right now. That 96.69 would be the 61%. So I like that 96.68 for the support. Don't necessarily expect we'll see that today, though. But there was just quite a slant up here. But this is just straight up. And like I said, in some ways, I guess with the mess they have in the UK, I guess it could have even been worse. But I didn't expect them to push it up this high. But then again, although there was a lot of talk about PMA postponing the vote, obviously that did go on and come into fruition. She's just got an absolute mess. I don't know who's in a worse shape, her or Trump. But like I said, they certainly did push it, but it could have been, I guess, a whole lot worse. Other than that, I'm not seeing anything of real significance from a technical standpoint, other than, like I said, this 97.06 now moves to 97.11 on a shorter term basis. We'll see how we pair there from there. And let's go and move into the gold market. So we're still keeping this upside momentum here. And that's what we talked about, like with the Canadian dollar on the weekly. So we're keeping, we opened up on Sunday, a little bit stronger, came lower, but we still have the upside momentum still, pushing higher. And it looks like it wants to get up to 1260. They may just be waiting until FOMC, and then they're going to run up there and make a pretty good challenge. We look on here in the daily. And we talked about 1268 being the 50%. This thing may want to go on and scream on up here to 1273. This thing is just holding up so well. It's near even a pullback on this thing. So you can see 1273 is huge on here. They may try and tick up to 75 or something. But once we get past FOMC, you definitely don't want to get in the way of this thing. It certainly looks like bulls are not willing to release those positions whatsoever. And a good challenge up in here in this 1273 certainly looks like it's in the cards. We still have our 1260. I think we kept that as our. See, we actually moved it to 1258, which on an intraday was 1258, but 1260 on the daily is what we're looking for it to go to. Well, it might get well beyond that by tomorrow. There's a 1258 right here. And like I said, they may come up there and grab that, but I don't think that's going to stop this thing. Once again, we got 67.20. You can see that right here. And that would confluence with the 50% of the entire move of 1167 to 1369. So, but once again, like I said, those are just targets for now, because once we get past FOMC, we could certainly go on and make a bolt for that 1273. And this market just doesn't want to pull back. And you can see how well it's held up on the exponential moving average. So we're going to go and keep that 1258. Thought there was even a chance we would make it down there. We're looking here on the gold. I thought we'd make it down to 1245. It looked like there was some pressure there. And but no, it held up. It held this 1248, maybe a little stab below. But I thought it just shows you how strong this market is. It just doesn't want to give up anything. So for right now, it's going to be right there at 1247. It does not want to give up. It's holding up so very, very well. And I think even if we repair back, everybody be grabbing and just seeing that as an opportunity just going to get long at an even cheaper price. So it certainly feels like this thing wants to resolve itself, maybe size 1273 post FOMC before the market may just, digest a bit of its gains. The big daily support comes in at 38. So once again, you can see how bullish this market is that you even have to pare back quite a bit just to get to the daily support. But it's formidable at that point. We'll move into the bonds now. You're finally starting to see this thing just ease back just a bit, not even a whole lot. And it's pretty interesting to see where the dollar yen is here and if they're going to be able to keep this area here. On a short-term basis, it's going to be right there at 42.15. 42.15 for the support. And resistance comes in right there at 43.20. Let's go move into the boons now. I was looking at gold, not the gold, but I'm sorry, the dollar index. Hard to say it's in a range. I mean, we've pushing the same side on the upper side here, almost bullish, but we'll keep it there. We'll see what happens once we get past FOMC. Having got to 62.84, we moved it down. I think we had our bias chart support at 96. Yeah, that's right. We went with just the level right in here. We've kind of tested that, but the upside still remains fairly, good upside still remains well intact. If we're to pair back here, it's actually going to be right there just above that, 62.71. Right there, 62.71. A long ways off here. At this point, it's going to be right there at 63.16 for resistance. 63.16. And let's go and move into the DAX now. Trying to find some type of a little bit of a bottom here. Still a little ways off. We actually had our resistance at 10,801. We've gotten just past that. There was our 801, and we just finally closed above that. That's where it's actually running right here. You see there? 10,834. So we're going to put that as a resistance, 10,834. And support. Comes in right there. 10,765. 10,765 for support. There's a bias chart, and we finished about 2 minutes early. For Dale needs to come in to start his webinar, and I'll get this posted in the room. And thanks for joining us here on the European Crossover.